Good morning, everyone, and thank you very much for joining me. This is the morning market review. It is Friday, it's the 22nd of March. My name is Russell Shaw. I'm a senior market specialist at FXCM. And what I'm going to do is just bring up our disclaimers. We'll keep this on screen for a few moments. If you can have a read through that, be much appreciated. Hey, Katie, good morning to you. Hey, Raj, good morning. Pleasure to have you on the webinar, or the live stream, shall I say. Just wanted to let you guys know there was no live stream yesterday. I'm begging your pardon. So I did get some emails about it, but we'll continue today. I'm just going to go ahead, bring up the market commentaries disclaimer. Okay, just keep this on screen for a few moments if you can have a read through that. Thank you very much. And let's go ahead, bring up the real rate. Okay, the top chart is the real rate. The bottom chart is the US dollar. Hey, Bra Shadrach, and welcome. Nice to have you on the live stream. All right, what we have here. Let's put in our peaks and troughs. Hey, Anna, good morning. Welcome. Let's put in our peaks and troughs. I'm just going to put the dollar further down. Okay. Right, here we've got it. The reference trough. We've seen this before. The reference peak. Right. Hey, Kim. Good morning to you. I did receive your email yesterday, Kim. Just as I said earlier, there was no live stream yesterday. I beg your pardon, but we'll continue. We'll continue today. I'm just going to put in again the higher trough here. Right now, this is where it gets interesting. Do we have a lower peak here? Okay, so do I have a LP, lower peak? Because if we've got the lower peak, then it looks as if we've got some sort of symmetrical triangle. And if we've got a symmetrical triangle, that's effectively a consolidation pattern. So we start moving sideways. And if we start moving sideways, what we've been saying, that makes it a little bit more difficult for us as traders, because it's invariably more difficult to trade sideways patterns than it is to trade trends, isn't it? Now, something that is worth mentioning, following the statement on Wednesday and the press conference on Wednesday after the Fed kept rates on hold, the probability for a June cut has increased. The last time we spoke, the probabilities for a cut in June were around about 55%. That's jumped now by about 20 percentage points. The chance for a rate cut in June is 75%. So it looks like we're getting that rate cut come June. And that's why we've got the real rate coming down this week. Again, just wonder if it's got this lower peak in here. Now, if we do get the lower peak, then it's going to be interesting if we can get a lower trough, because then the real rate is in downtrend. If the real rate is in downtrend, then we want to watch the US dollar. And remember, the US dollar and the real rate are highly correlated with one another. So if we go now to the US dollar, we can do a similar type of analysis here. And it's quite tough for us at the moment because we don't have a trend, right? We traders, we like trading trends. The market, at least the forex market, is not trending. That makes it a bit tough for us. Okay, we're just going to have to work with that until it clears up. So we've got reference trough, reference peak. Okay, now higher trough. And the question is now, what's happening with this leg over here? Put a question mark. Again, Is it going to be a higher peak or a lower peak? If we get the real rate coming down, I would suspect it would be a lower peak. But if we get that lower peak there, then it's not really our friend, because then we still got to deal with a consolidation pattern. What's interesting about the triangle is we're pretty close to apex anyway. It may evolve into some sort of rectangle, but some sort of sideways consolidation. But the idea is, if we can get a lower peak followed by a lower trough on the real rate, I think all of a sudden the market opens up for us. And if the market opens up for us, when I say opens up, I'm talking about really a trend defining. And once we get a trend defining, effectively trading that trend. Because you know what the true definition of technical analysis is? It's identifying a trend, trading that trend, exiting when that trend ends. So we've got to identify the trend. And that's where we are right now. If there's any questions around that, type those in. Let's just take a look at Euro, just to see how Euro is looking as we try and determine whether there is a trend on the greenback or not. Okay, so I'm just going to go through to the weekly Euro US dollar chart. Let's just take a look here. Okay, and I'm just going to go ahead and share that tab. All right. So we're lacking trend here as well. What do I mean we're lacking trend? Well, we don't have the lower trough. The lower trough effectively comes in when we take this point out. The kind of chain of causality, we want to see real rate come down. Okay, that's still to be determined, but it looks as if we've got 3 rate cuts for this year. That was almost confirmed on Wednesday. If the market continues to discount those cuts, we see dollar come down, okay, then we probably don't get this trough taken out. And I would suggest that we actually get a reversal here. But again, this is all supposition, because at the moment, we've got the disadvantage that we are not in a trending environment when it comes to real rates and dollar. Once we get that developed further into trend, life becomes so much easier for us. But until that happens, we're going to have these live streams every day, and we're going to be watching to see if we get, so it would be something like this. Trough, peak, and now I'm going to just put in question marks here. Higher trough, question mark. All right. And if we get the higher trough question mark, then I could put in higher peak question mark. Now, why would this be my preference? Why would this be my preference? I go back to the real rate screen, and I want to see a lower peak, lower trough. It's all very much supposition at the moment. It's not first price talking in supposition, but we don't have a trend. We don't have a trend that we can actually play with or mold as technical analysts, and that makes life a bit tougher for us. Again, I invite any sort of questions. Please come ahead, go ahead, type those in. We'll try and address those. Let's just take a look at the stock market. Before we look at stock market, let's just take a look at gold. I'm begging your pardon. Let's see what's happening on. Now, the idea is, if we do get real rate coming down, if we do get US dollar coming down, I would expect gold to be supported. Let's take a look and see if that is the technical case. A very strange looking week. What we have here is a inverted hammer. We've got a who's in control on this week's candlestick? It looks to me as if the gold bears actually took control away from the bulls. So we've got this resistance area playing out round about 2.2. Okay, I think if we can get the real rate coming down, if we can get greenback coming down, I think the 2.2 falls aside and we do get higher gold prices. But there's no doubt that we're fighting a resistance area 2.2. 2.2, by the way, is besides it being a price resistance level, so we've hit it once, twice, 3 times. Besides being a price resistance level, it's a psychological level. Round numbers tend to be psychological levels, and that's what we're dealing with when it comes to the greenback. Nevertheless, let's see if there is a potential trading opportunity. Yeah, I think if there is going to be a trading opportunity, gold is a perfect instrument for us to be analyzing. So we ask ourselves our questions. Where are we relative to the 30-week exponential moving average? We're above it. What direction is the 30-week exponential moving average? And it's moving nicely in that northeasterly direction. Lovely. What about the RSI? RSI is above 50 and it's not overbought. Okay, so we do seem to have a bullish momentum there. And the question now is, are the bulls going to effectively are they going to find it as a compelling area to come back into the market? Okay, are they effectively going to mount an attack, so to speak, from here? Let's just go through to our daily chart here. I'm just going to share that tab with you. Okay, interesting. I'm just looking at this from a few different angles. First of all, let's put in peaks and troughs. Okay, let's put in our daily peaks and troughs. So we've got a trough over here. I like that. We've got a peak over here. I like that. We've got a higher trough here. Again, I like that. And we actually got the higher peak as well. So this is all looking beautiful. Now, it's interesting. We did go overbought. Okay, we did go overbought. And it has normalized somewhat. I'm not a big fan of using divergences on RSI, but just for the sake of transparency, there is a bearish divergence here. Can you guys see that? I'm not a big fan of those, and I'll tell you why I'm not a big fan of that. Because it's effectively measuring, in my opinion, if we've got a bullish uptrend, which I think we do have for gold, then the divergences are effectively measuring swing highs. They're not really anything to fear. The bearish divergences would almost be something to celebrate, because it brings up the potential dip in the uptrend. So I'm not a big fan of divergences. What I prefer, the way I prefer to use the RSI, as you guys know, is where are we relative to the 50 line? Well, we're above 50 here, so there's a bullish underlying momentum. We basically got a higher trough, higher peak here. Well, what do we need on the hourly chart to potentially take advantage of that? So let's go through to the XAU USD hourly chart. Let's go ahead and share that tab. All right. Now this is interesting. I think this is interesting. What we can do is we can put it in. So I found a new function on. This gives us the zigzag. So we've got a 1, 2, 2, 3, and then this is possibly the next 1, 2. So we want to see if we can find out. Sorry, my camera is right in the way. 1, 2. So 1, 2, 2, 3, and here we're looking to see if we've got potentially the next 1, 2. Well, just take a look at the current candlestick. What kind of candlestick is this, guys? It's actually a bullish candlestick. It's a, let's call it a dragonfly doji. Okay. In other words, the bears seem to have lost control. If you take a look at where the stochastic is, stochastic has crossed bullishly. Okay, so that is encouraging. Now, what would be the next logical step would be if the EMAs can cross bullishly as well. So we'll need to see the green EMA crossing above the orange EMA. Then we want to see the angle and separation to the upside. And if we get the angle and separation to the upside, we'll keep an eye on stochastic. And if the stochastic makes its way through to the upper quintile, then all of a sudden gold is starting to swing, and then we've got a opportunity in the making. Okay, so we want to just see if we can get that bullish cross. So gold here, to me, looks as if it may be dipping in an uptrend. I'll be watching that very, very carefully. Remember, 2-2 is kind of our resistance level, right? So just keep an eye on that. We're $40 away. Sorry, $30 away, I beg your pardon. Again, any questions, go ahead, type this through. Let's just take a look at DAX. Again, top-down analysis. Right, we start off with a weekly. I'm just going to go ahead and share that tab with you. Now, these are the line studies that we had drawn in previously. I'm very cognizant of the fact that the DAX weekly chart is overbought. But there's no doubt about it that we are in an uptrend. Here we've got reference trough, reference peak, higher trough, higher peak. If we get a pullback here, I'd be looking for the next higher trough. And if we get the next higher trough, well, I think that would be the next platform for the next higher leg. So an overbought condition here, I don't think is something to be terrified about. I think it's something that we should be stalking, effectively looking very, very carefully for an opportunity here on a pullback. What's really running the risk markets at the moment? The AI narrative, the prospects of rate cuts, moderating inflation, that we're still getting growth. Well, the growth's really coming out of the US, and that's buoying global markets. By the way, if we start getting a growth narrative out of the US that's showing a moderation in growth, then we're going to have a different discussion. Then we'll be talking about risk rather than opportunity. So just bear that in mind. Let's take a look at DAX in terms of the daily chart here. I'm just going to go bring it up in terms of our zones, and then I shall share the screen. Okay, again, it's overbought. It's not a very comfortable position. I would be looking for potential pullbacks to exploit by the dip opportunities here. Yes, as long as we stay above the 80, there may be a momentum push here, but it's a dangerous play at the moment. Just bear that in mind. Let's just see what's happening on the hourly chart as we head towards the cash open. So we've got less than a minute towards the cash open. Let's just bring up DAX on the hourly. Okay, here's DAX on the hourly. There does seem to be support for the DAX today. It does look as if it's going to be risk on. If that's the case, we would need to see a positive crossover of the EMAs, and would need to see angle and separation in terms of those EMAs, and we would need to see the stochastic move into the upper quintile. So there is a potential risk on move today. Guys, just be very mindful that the daily chart is overbought. Sometime over the next few days, that is going to correct. Okay, there's going to be some profit taking. Be very, very cognizant of that. Okay. There might be even profit taking today. We'll see. If we get a negative crossover in the EMAs and we get the stochastic moving down, then I would suggest that profit taking place. All right, let's take a look at SPX 500. Again, top-down analysis. Again, I invite any questions. Any questions, please go ahead, type those in. All right, so here is the weekly chart of S&P 500, and I would suggest that it's looking very similar to DAX. Yes, we've got a very strong uptrend here, no doubt about it, but we are overbought. At some stage, I think that overbought needs to normalize. I think that's an opportunity. Why? Positive growth, AI narrative, rate cuts, moderating inflation. We're really going to need one of those four things to be compromised immensely for the narrative to change. Okay, I'm going to go straight through to the SPX 500 hourly chart. See what's going on there. Okay, just sharing SPX 500. And again, we've got the positive crossover on the stochastic. If we get a positive crossover over here, then it would be, I would suggest, a risk on day. And if we make a move towards the upper quintile, then there's probably a swing. It's probably a swing. Yeah, we can take a look at NASDAQ as well, Katie. Absolutely. Guys, just take a look. If we make it into the upper quintile, that's where the magic happens. That's where we really swing. Okay, so if we get a positive crossover, in EMAs and we move towards the upper quintile in the stochastic, then we got a swing. But just bear in mind, if we get some sort of negative movement here and the actual stochastic stays down in the lower quintile, I think that's profit taking. Okay, and that profit taking is a real possibility now. We're getting closer to it. Katie just wants us to take a look at NASDAQ. Can absolutely do that. What we'll do is take a look at NASDAQ on a weekly scale and work our way down. All right, Katie. Just sharing that tab. This is interesting, actually. Let's just clear the. I'm removing the drawings here. What I want to show you guys. Okay. Just remember, before we get into the analysis of the NASDAQ, just remember S&P is overbought. S&P is dominated. The top 5 or 6 companies, I think, are all tech companies. Overbought condition in the NASDAQ. In fact, we've got some positive signs on the NASDAQ. Take a look at, we've got here a reference candle reversal, assuming that we close above last week's high at the end of trade today. If we get close above last week's high at the end of trade today, then we've got a reference candle pointing to the upside. Look where we are. We're well above 30-week moving average. 30-week moving average moving up nicely to the in that northeasterly direction. Okay. Let's just take a look at NASDAQ on the daily chart. We'll take a look at it in terms of our zones. I'm just going to share that with you. Let's just get rid of our drawings here. All right, so big clue coming from the RSI. RSI has popped to the upside. It's popped at 0.1, right? So it's popped at 0.1. Where are we in terms of a zone? We're in zone 1. We're in our bullish area. We're in between the upper blue, the upper red. What's happening with the Bollingers? I'm just zooming in here. Bollingers are starting to move outwards. So it does look like we're getting some volatility to the upside. Let's go through to our hourly chart here, KD. Okay. And just sharing this is NASDAQ. We've already got a crossover 1 over here. What we need is a crossover 2 here. Okay, so look very carefully at the hourly charts just to see if we get the technical signals. Bear in mind, it's high risk now, guys. Profit taking is certainly on portfolio managers' minds. There's a question here. So when are we expecting the overbought of gold? When are we expecting it? Well, when the indicators go overbought, right? So gold hourly chart. Okay, we were overbought. We've gone back into normal territory. Okay, weekly chart. So again, I'm not sort of anticipating an overbought condition until it moves into our overbought areas, which it's not at the moment. So I hope that helps, Musa Jalo. All right. I think that's as far as we'll go this morning. Okay, if there's any other questions, or if I didn't answer any questions, you can just type that through now. I want to thank you for joining me this morning. I want to wish you guys a great day ahead, a great weekend ahead, and we'll pick it up again on Monday. Next week, we're going to have the long weekend. Just remember, next week's the long weekend. So I think it's Friday, Monday will probably be off. All right, let's wrap up here, guys. Thanks very much, and speak to you on Monday.